How does payroll year-end reconciliation work for foreign employers? What year-end reconciliation really is? Year-end reconciliation is the process where your Canadian payroll story has to balance from every angle. As a foreign employer, this is the point where you prove that what you paid, what you withheld, what you remitted, and what you reported all line up. During the year, you are focused on each pay cycle. At year end, the tax authority wants to see the full picture and make sure it makes sense. In practice, reconciliation means taking the totals your payroll system shows, the totals your bank shows, and the totals the government has on file and making sure they match or that you can explain the gaps. Connecting pay records to remittances. You start with your payroll records. For each Canadian employee, you have total gross income, income tax withheld, CPP contributions, and EI premiums. Those employee-level numbers roll up to annual totals. Separately, you have a history of every remittance you sent for the year under your payroll account, covering both employee and employer portions. The first reconciliation step is simple. Do the remitted totals match what your payroll calculations say should have been sent? If you withheld one amount from employees and remitted a smaller amount, something is off. If you remitted more than you ever calculated, that is also a red flag. For a foreign employer, this check is essential because it catches misapplied payments and data entry errors before they show up as penalties or reassessments. Matching employer records with CRA balances. The next layer is matching your internal totals against what the tax authority shows on your payroll account. Through the online portal, you can see how each remittance was applied and what the year-end balance looks like. Ideally, there is no surprise balance owing and no unexplained credit. If the government shows a shortfall, you compare their numbers to your own and look for things like late payments, remittances applied to the wrong period, or missing employer portions. If there is a credit, you figure out whether it came from an overpayment or from reclassification of earlier amounts. The goal is to walk into year-end filings knowing that the account is clean, not discovering an issue after slips have gone out. Preparing and reconciling T4 slips. Year-end reconciliation is also about what each employee sees. Your payroll system generates T4 slips that summarize each employee's income and deductions. The total of all T4s should match your annual payroll totals for income, tax, CPP, and EI. That is the internal reconciliation, slips to system totals. Those slip totals should also reconcile to the remittances you sent. If your T4s show a total of a certain amount of tax withheld, but your remittances add up to less, you have a problem to solve. That mismatch is one of the quickest ways to attract attention, so foreign employers need to treat it as a mandatory check, not a nice to have. Handling taxable benefits and oddities. Taxable benefits and non-standard items complicate reconciliation. Company-paid benefits, allowances, and certain reimbursements can be taxable and must appear in the right boxes on T4 slips. If your payroll setup has been sloppy about coding benefits, year-end is where the confusion surfaces. As part of reconciliation, you review benefits, allowances, and unusual payments to make sure they are classified correctly and that associated tax and contributions have been handled properly. For a foreign employer using US-centric benefit structures, this step is crucial because not all US tax-free benefits are tax-free in Canada. Correcting errors with adjustments and amended slips. No matter how careful you are, mistakes happen. Employees are coded incorrectly, benefits are missed, or a pay run is misdated. Year-end reconciliation is where you find and fix those issues. That can mean adjusting internal records, filing amended T4 slips, or sending additional remittances to cover underpayments. The important thing is that errors are corrected systematically, not ignored. The earlier you fix them, the easier it is to keep staff and the tax authority on side. Coordination between home office and local advisors. For foreign employers, reconciliation is usually a shared job. The home office owns the numbers, but local payroll providers or tax advisors understand the Canadian rules. Year-end is when those two sides must talk. The advisors confirm that slips and summaries are correctly formatted and filed. The Home Office confirms that what was filed matches group accounting and that any adjustments are properly booked. If you leave reconciliation entirely to a provider with no oversight from your own finance team, you are trusting that they will carry your legal risk without error. That is not how responsibility actually works. Final thoughts. For foreign employers, payroll year-end reconciliation in Canada is about alignment. Employee level totals must match payroll system totals must match remittances, and remittances and slips must line up with the balances the government shows. When everything reconciles, you close the year cleanly. When it does not, year-end is your chance to fix problems before they get expensive. If you want a simple checklist that walks through each reconciliation step from first report to final slip, you can explore more detailed guidance at www.theaccountingandtax.com. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.